Fun times, everyone. I'm champion trader Kevin Davey, and today I'm going to show you an algo for the silver futures market. And here's what it's done since I developed it. This is out of sample performance. So let's get started. So today I'm going to talk to you about a strategy for the silver futures market. And if you want more information, go to the CME Group website. There's the link. It'll give you all the contract specs and everything you need to know about silver. The symbol is at SI. That's the continuous back adjusted futures contract, which is what I trade and what I test with. And the contract itself is $5,000 per point. So if you look at the chart on the right, as it goes from 25 to 26, that would be a $5,000 equity swing. And overall, the contract has a value, notional value, about $120,000. But you don't need $120,000 to actually trade this. You can trade it with $9,900 in initial margin, at least as of this date. The margins do change over time, so you want to check this. But as of today, this is the end of December 2023, you need around $10,000 just to open one silver contract. But with that, you'll be controlling $120,000 worth of silver. So that's how that works. And if you see in the chart over on the right, for the past 3 or 4 years, the range has been about $50,000 for this contract, just between the minimum and the maximum. So there is quite a bit of movement, and there's quite a bit of volatility in this. Lately, the past year or so, it's kind of been flat. There hasn't been any sustained trends, but that could all change. So let's take a look at the chart setup. I'm using the continuous back adjusted contract. It's the at symbol SI, and that allows you to do back testing. If you wanted to trade this automated, you'd have to include with Tradestation, you'd have to include the month symbol and the 2-digit year. But that's it, and I'm using 89-minute bars. You might say, why not use 90 or 60 or 120? Sometimes I like to do things a little bit differently and use some odd number bars. I find that sometimes they work out good, and they're kind of different than the rest of the crowd, and that's something I like to do. So let's talk about entry here. And what I'm going to use is a candlestick pattern. And you might have heard of candlestick patterns. If you didn't or haven't, just Google it and you'll find lots of information. There's a lot of really good books out there. There's an encyclopedia of candlestick chart patterns. There's all kinds of things. What I'm going to look at for this particular system is just a simple doji type pattern, where to go long, I'll use the morning doji, where what happens is you have a down bar, which is this red candle. Then you have a doji bar, which basically means the open and close will be the same price, or very close to the same price, depending how you set it up. And then the next bar will be a green bar, would be an up bar. The idea behind it is that this is a buying signal, because you had a downtrend one bar, and then the middle bar was kind of indecision. People didn't really know what to do. And then the third bar recovered at least some or all of that first bar and moved up. That is a long signal. And you can think about it, an evening doji star would just be the exact opposite. Okay, so let's look at a couple sample trades here. Again, the rules are pretty simple. If you find a morning doji star, you buy, and if you find an evening doji bar, sell short. So over on the right, you can see you have a down bar, the doji bar, and then the signal bar, which is that up green bar, and then you'll buy the next bar at the open. And then over on the left of the chart is a short signal where you have an up bar, the doji bar, and then a down bar. And then you'll open short at the next signal. So that's pretty much it for the entry. If you look at the code for it, it's pretty simple. This is Tradestation, easy language format. And so there's a built-in function for the doji, for the morning and evening star. So that's all I have to use. And I said if it's a morning star, then buy. And if it's an evening star, sell short. And with that, I just added on a profit target. It's not a limit order, it's just a market order. So it looks at the close of every single bar. And if your open position profit is above, in this case, $2,000, which is a significant amount for silver, you exit. And that's it. So it's a pretty simple code, pretty simple strategy. And again, if you followed any of my previous videos or any of my work on my website, you'll notice that I like to keep things simple. I don't like complicated systems because the more complicated they are, usually the harder they are to compete in real time, meaning they won't work as well in real time if they're very complicated. Okay, so let's look at the equity curve for this particular strategy. And you can see there's definitely some downtrends, but lately, the past 20 or so trades, it's been doing pretty good. And, don't be fooled by this, though. It doesn't mean that you're just guaranteed to make profit because the last 10 trades have made profit. I'll show you in a little bit. There is a downside to this. This is just the closed trade equity. Something you also should look at is the open trade equity. It'll show your intra-trade drawdowns. This just shows closed trade performance. One bad thing about this strategy, and I'm sure people will bring it up in the comments, is just the lack of number of trades. So sometimes balancing simplicity with not a lot of trades is a worthwhile trade-off. If I was doing a lot of rules and a lot of variables here, 50 trades would not be enough. Here's a performance report, and you can see over time it's done fairly well, long and short, about the same performance. That's always nice. I personally like strategies that are symmetric, that have exact opposite rules for going long and short, and I also like strategies that tend to be balanced. Now, not every market can be this way, and you'll have strategies that are mainly short or long, crude oil or soybeans or whatever. But all things being equal, I like it when the long trades and short trades sort of balance out, at least profit-wise. So I mentioned about the intra-trade drawdowns. This is a detailed equity curve. And again, it still ends up in the same spot as the closed trade equity curve. But what you see here and what you see circled are the intra-trade drawdowns. So even though a particular trade might have ended up with a profit, in this case, the one circled had to endure a big drawdown. And that makes this one tough to trade. Those intra-trade drawdowns really just drain you because you're holding them onto them for a while. In this case, not too long. There's another trade around 2018 that you can see that was in a drawdown for a lot longer time. But those are mentally and emotionally exhausting. It's hard to think of the closed trade equity curve that, oh, well, the last 10 won, so this one will probably win, when you're in a big drawdown. You start wondering, is the system broken, and those kind of things. So there is risk here. It doesn't, or it's not as good as it looks initially with just the closed trade. So that's why I always caution people to look at the detailed equity curve, just so you know what you're getting into. Here's the trades from 2023, And you can see that it took a trade in January, but then didn't take another trade until late April. And then a couple more trades, and now it hasn't taken a trade since late August. And now this is the end of December, so almost 4 months without a new trade. So there's not a lot of trades here. So that makes this strategy, pretty tough to trade because it's on the sidelines a lot. And when you're flat, obviously you're only in the market a short period of time. In this case, 19% of the time. So think about it, if this was the only strategy you would trade, most of the time your margin is not being used, your equity is not being used, and you're just sitting on the sidelines. But if you're trading this particular system with a portfolio of strategies, then it could be a nice addition, because every once in a while it kicks in and trades, and you might not need a bunch of extra margin for it because maybe some other strategies you have aren't trading. So you can use your margin a little more efficiently when you have a bunch of strategies rather than just have one. I normally do a walk forward analysis as part of the strategy. So I just included the equity curve for that, the closed trade equity curve over on the right. That's part of my process. I call it the strategy factory. It takes you from goals and objectives all the way through to a real money live strategy that you're trading. It's either that or it's garbage, which most strategies are. But those are the steps I use. I teach those steps in my Strategy Factory workshop. If you're interested, you can just go to my website, click up on the top where it says workshops. You'll learn all about how I teach people how to build winning strategies. All right, well, remember, if you have questions, comments, leave a comment in the video. Hit the like button, hit the subscribe button. I'll keep making more of these. People seem to like when I do demo algos like this. If you like it, definitely give it a thumbs up. You can also email me if you don't want to comment publicly. Just send me an email, kdavey@kjtradingsystems.com. And be ready for the next one. I'll try to do one in another few weeks as long as people keep wanting these. I'm Champion Trader Kevin Davey. Have a great day.